Good morning. Today's Thursday, May 23rd, and the chart that you're looking at right now is of the E-mini S&P 500 chart. And for those of you that I'm sure most of you know, the market really sold off yesterday. It's something that everyone's been looking for quite a while. So it did just that. It'll be real interesting to see if we got follow through today. The market just opened up. Look at this is where the market closed yesterday, roughly about 1656. Opened up down here at 1637. Okay, so we've opened up quite a bit lower, almost 20 S&P points lower. Okay, now the big factor here will be if the market attempts to try to fill that gap. If the market does not try to fill the gap, or if we don't see any type of rally, and what I'm going to do here is I'm going to measure from this high right in here where I'm moving my cursor, right here down to this low, and of course, if the market makes new lows, you'd want to readjust it just to come up with the fib levels, okay? If the market's not able to rally at least 38.2% retracement back to try to fill this gap, yet we continue to move lower, today could be a huge down day. But again, it's too early to try to predict that because the market just opened. And like I always say, the first half hour to 40 minutes of every single trading day helps set the tone for the remainder of the day. So this is what I want you to do today. The first half hour, after the first half, so at 10 o'clock Eastern Standard Time, put a horizontal line on the high here. So after the first half hour trades, you're going to have a high of the first half hour. We'll just pretend it's there. The low of the first half hour, let's pretend it's there. Then you're going to wait for the market to either break up through the highs of that first half hour or down through the lows of the first half hour. And once you get that, okay, once you get that, that'll help give you some type of bias of what's going to happen the remainder, not necessarily the remainder of the day, but for the next leg, for the next move up or down. So you just want to wait. So let me just show you another thing. Now this is based on the software that I have and based on the programs that I teach here at Trading Concepts. As you notice, these bars are green and red, right? So look at yesterday morning. The bars turned green. Green means that the trend is officially up and you're looking to buy the market. So look at that yesterday, right here. That was a nice move, almost a 15-point move to the upside before topping out. And look at when it turned red yesterday, right here, before the big meltdown yesterday, right here. So not too shabby. It turned red at about 1672, and the market dropped down to 1645, almost a 30-point move to the downside once the bars turned red. So again, the software really just helps and aids you in the direction of the market, what direction you should be looking to trade in. And so it just makes things much easier. And again, if you're all interested in learning more about this software, all you have to do is just go to the main website. Go to tradingconceptsinc.com/software, and then you can read more about the trend software and stuff like that. Okay, so yesterday was a good trading day. Let's go on and look at the daily chart and just see. Okay, now we've been talking about this for a while. Remember when the market gapped? You had a nice run up. Yes, the market is parabolic, and everybody's been saying the market's got to sell off, and I totally agree with that. It's just a matter of when. Nobody can pick a top, okay? Nobody can pick a top or a bottom. I think it's much easier to pick bottoms, though, than it is a top, especially in this type of environment. Excuse me. So yesterday, a big key level, once the market opened up, ran up, took out the prior day's high right here, which at the time obviously was the all-time high. And then intraday, the market reversed, as you saw on the 3-minute chart that I just showed you. When the market took out the prior day, so yesterday was what, Tuesday or Wednesday, Tuesday's low, because you thought yesterday was Wednesday. When Wednesday's low, or when Tuesday's low was taken out yesterday, right here, that was the big red flag that you're looking to go short big time. When 1660 was broken to the downside, here, let me put this cursor on. when 1660 was broken to the downside yesterday, but first, after rallying and then completely reversed, remember the market opened up here, right? Traded up, and then reversed completely intraday once it took out the low of Tuesday's low. 1660 was penetrated the downside. That was a huge moment. You should have known that the market was breaking further down. Now I call that the creation of an engulfing pattern, or what I like to call, and you hear me say all the time, outside vertical bar, which is simply when the market takes out the prior bar's high and then when the market takes out the prior bar's low, right? An engulfing or an outside pattern. So the creation of one of those two bars, which is the same thing, is very powerful, right? It's the penetration through the prior day's high or low, in this case, low, which creates that engulfing or outside vertical bar. That's a very powerful trade. That is a phenomenal trade setup. So take a look at this chart. This is a daily chart. And remember, everything that I just showed you, the creation of an outside vertical bar is very powerful. And then I'm going to quickly switch back to the 3-minute chart and show you where that 1660 was, which is the break that creates the outside vertical bar or the engulfing pattern. 1660 was right there. 1660. So when the market broke down through 1660, this level right here, the white horizontal, that was the creation of an outside vertical bar. And from 1660 down to the low of 1646, I mean, you're talking about a 14-point move. And that, to me, is almost like an automatic trade. Now, if you want to keep it overnight, that's fine. If you did, look at the market right now. The market opened up a lot lower, almost 20 points lower, folks. That's huge, right? Again, we're waiting right now. If the market is unable to pull up further and we break down through these lows and we get a sustained move, we're going to go a lot lower today. All right, I hope that's clear, everything that I've just spouted off to you there. I mean, it's pretty crystal clear, but if you learn the principles that I'm trying to show you, it'll make you a much, much better trader, okay? Let me show you the trade that we're also in. We are along the, remember, CEF. All right, CEF, we put that on a couple days ago, right here. We're at 1578. We're up only about 26 cents on this now. Obviously, when you're trading stocks, I mean, 80% of stocks follow the entire market, right? So if the market's getting slammed, a majority of the stocks are going to get hit as well. So you want to be aware of that. So when you try to time yourself when trading stocks, you want to be in sync with the overall market too, right? You don't want to be, well, I don't want to necessarily say you don't want to be buying stocks when the overall market's getting hammered. I'm not necessarily saying that because there are certain sectors that you can trade, okay? But again, gold, the GLD, the ETF of gold, that's a good one to trade, and that's trading kind of inversely right now of the overall market, which is good. What I think we could be seeing a double bottom here in gold for short term, right down in there, retesting the lows, right? So we'll take a look at this very closely. What else? Netflix. What have I been saying about Netflix? We're looking for the market to pull back a little further. Remember what I told you? Let's see. We're looking for the market to pull back between the mid to the lower band. We've gotten down there. I'm looking for a little bigger move to the downside, so that's still on my watch list. Obviously, Baidu. Remember what I said a couple days ago when the market made this rally? First of all, we called that the market should move up from here, right? We made a nice move, and then when the market hit this high, right near this 200 exponential moving average, I said that we're hitting resistance. Look for this market to move back down, and we have been. Right? Pretty much in sync with the overall market here on this stock right there, right? Pretty much came back to this high after this big gap, and we've held as resistance, right? So that's nice there. Let's take a look at that Mexican peso. Now this trade, it's kind of, we got a little movement at that 50 exponential moving average up to here, but we're back down. So bars are still red, so the overall trend is still up. We've traded down to this low, but we're trading up in here now, so let's just watch this. Again, the 200s Exponential moving average is sitting there, and the overall trend is still up, so we're going to keep this on our watch list still. And let's just, okay, AXLL. Okay, the market has come down, hit our stops below this low. That's to be expected because this stock pretty much really, it's not the overall. This is the NYSE stock, so this is going to follow the S&Ps a little bit more closely than the other markets that I've been telling you about. So this is taking out this low. So, and the bars have, in all fairness, turned red down in here anyway. So, all right. So again, that's where we're at. Let's take a look real closely at the 3-minute E-mini S&P chart again. Again, we'll see if this reversal is underway. Again, look at the daily chart. This is something you got to take note of. Look at the range of yesterday. The volatility is really increased. The range of yesterday is equivalent to about 3 to 4 trading days on average that we've seen for quite a while. And this entire move up, the volatility has been pretty low. This is really increased. So let's just see what happens today and hope that helps. Okay, if you got any questions, let me know. Have a great, profitable day. Bye for now.